Good afternoon, and welcome to another edition of Second Take. I'm with Sylvia Varnhelmer-Reagan of The Real Deal. Sylvia had a story about the Waldorf-Astoria, which is one of the most, prominent new development condo projects in New York. It just seems like the timing didn't quite work out, Sylvia, for this one.
That's right. Well, they initially launched sales to the public at the beginning of March. And of course, that was when the pandemic had just arrived in New York, and no one had any idea how quickly it would spread and how sort of huge this would be here in New York. So a couple of weeks later, the sales gallery was closed, of course, and the cases in New York had risen exponentially. So it was very difficult timing.
Right, but even if this had not happened, right, the Waldorf was launching at a time when many say that kind of product, which is, absolute top of the line, storied brand, very high price per square foot. There was already a lot of question marks about whether the market could sustain that kind of project, right?
That's right. I mean, the luxury market has been struggling for some time. I don't think anyone would dispute that. And there had been signs a couple of months back that maybe the tide was shifting a little bit. I mean, it wasn't a huge jump, but there were some promising signs, and some in the industry put that down to prices coming down and people getting more realistic about pricing. So there was some positive signs, but by and large, the market had been soft for a long time. And the idea of bringing hundreds of luxury condos onto the market was, it's a difficult sell, I think. But the sponsor of this project was confident that they had something unique to offer, and despite the market conditions, they would successfully move this inventory.
Right. When you think of the Waldorf, you think of the pomp of New York City, right? That's what
Right.
Marilyn Monroe, Frank Sinatra, all these luminaries had a thing at the Waldorf, and I guess they were trying to capitalize on that. When you spoke with the brokers, I believe it's Douglas Elliman, selling the building, correct? Like they're marketing the units. When you
Right.
spoke with them, what are some of the tactics they hope to use to convince buyers to come?
Right. Well, I went to the launch at the beginning of March, and they very much focused on, as you say, this incredible history, this iconic hotel and its many famous guests. So I think they were looking to show people that they could be a part of this incredible legacy and this iconic New York institution, really, and they could have their own little slice. And there was a broad range of prices available because you could get a studio or you could get a four-bedroom. And so no matter where you were on that spectrum, and of course it is a spectrum that's still rather high end, you could perhaps be involved and be a part of this new look Waldorf, which still has this incredible history.
And you talk about, so now the state of play is sales center is obviously closed, and then they're relying on something that may work in a smaller, more modest apartment, but they're relying on virtual showings at this point, right? Has there been any talk among brokers that virtual showings have worked for this kind of high end product?
It's a good question. I think the jury's still out a bit on virtual showings, although I don't think that anyone believes that they will bring in a lot of luxury deals, because of course you're asking someone to buy a home and part with a lot of money at a difficult economic time and without seeing that property physically. So I think that the general feeling is that they won't necessarily bring in a lot of deals, but they may be useful at facilitating some. I couldn't speak to the situation at the Waldorf specifically, although they did say they've had a lot of interest. I've heard anecdotally too that there might be some more momentum with virtual showings for rentals, because of course that's
It's lower stakes, right?
exactly, you might not see it, but you're also not having to commit to spending a lot of money on it, because of course it's a temporary setup.
Mhm. So now you mentioned briefly, you alluded to the sponsor. This project has a pretty interesting backstory, right? It was originally purchased by a company called Anbang, a massive Chinese insurance company, And then there was a really, really wild story. Just for some background, this company bought the Waldorf-Astoria for 1.95 billion. They purchased a hotel portfolio from Blackstone for 5.6 billion. They were in talks to purchase 666 Fifth Avenue, which is obviously the Kushner, the drama around that Kushner property. And then they just evaporated. They evaporated. Their chairman was actually sentenced to 18 years in prison. And then what happened? So who's the developer now? Or who's behind this project?
Right. So as you say, it has this incredibly dramatic backstory. The company was taken over by Chinese regulators, and basically Anbang was dismantled and a new company was created called Deja, and it was in charge of some of Anbang's foreign assets. And so the sponsor is now Deja, and it's governing the Waldorf and seeing it through to completion. But it's an offshoot of sorts from Anbang. So the US representative for Deja previously worked for Anbang.
And have you heard any, so, the Chinese have been involved in development projects here, as have many other foreign players. But from my understanding, this is the first absolute high-end project that is being developed by a non-US company. Has there been any talk among brokers, among buyers, hey, you know what, when it comes to the very tippy top of the market, maybe we don't trust the outsiders? Has there been any chatter or anything like that you've heard?
I have not heard that myself, so I don't know. Sorry to say, but I haven't heard that myself.
I'm just curious. Typically, they say, hey, the foreigners come in with the money, but they typically need a local partner on the ground to provide that expertise, to provide that market knowledge. So I wonder if it's playing out here. And then probably the last question, just to get a sense of what is actually going on in the new development market now. So you had mentioned you had some interesting stats in the most recent activity. So just talk about that a bit.
Right. So some new data out today shows that last week there were 2 luxury contracts signed in Manhattan. So that's properties above 4 million. And this was the 3rd week in a row that there had been 2 contracts signed. Okay. So over that 3-week period, that's 6 properties. By contrast, there were 65 last year in that same 3-week period.
Oh, and so it's down by a factor of 10. Okay. That's
a huge drop, right? Yeah. And it just shows what the pandemic is doing to an already soft luxury market. Mm-hmm. That 65 figure was down significantly from 2014, and now in 2020, with brokers unable to go and show homes, you're at 6. So I think things are really grave in the luxury market, and I think it's going to be very difficult to come back from this. And of course, we don't know when brokers will be able to resume their normal work and show properties again. So it remains to be seen what will happen from here. But when you compare those previous years to now, the numbers are really not looking good.
And there's so many other factors that even if brokers are allowed to resume, when does international travel happen enough so that the foreign buyers who did buy a lot of these units, they can come back, they can get comfortable with the market again? And one more thing that we can probably close on just is that, people look at these sales that happen at 220 Central Park South, which is still seeing, 20, 40, $50 million closings, and they think, hey, the market might be okay. But it's important to note that activity isn't from now, right?
Right, and we looked at this a little bit earlier on, but these are properties that went into contract a long time before, and so that activity and the price that was reached or agreed upon reflects a market of another time rather than the market now. So that can be a little confusing when you read about it or hear about it. What does that mean? Well, it usually speaks more to a market past than it does to the reality today.
Fair enough. Sylvia, thank you.
Thank you.